So, do you buy value? Do you buy deep cyclicals? What do you like?
We think you buy value for a while longer. So first of all, this is about the strongest rally that we've seen in value since 2016. It's not the fits and starts that we've seen over the past few years. A lot of things look better. Earnings were better than expected in the third quarter. The economy's stabilizing, some progress on tariffs. All of that should lead to this value leadership continuing. But going into 2020, we still see low to mid-single digit earnings growth. We just don't think the earnings and economy will be where you need it to be for value to work more than a couple of quarters.
I wonder, when you talk about earnings not necessarily being there, I was struck by Emerson CEO Dave Farr the other week talking about a challenging environment for the next 12 to 18 months. Do you agree with that? Do you think that the presidential election and all these uncertainties will keep things tough for that long?
It'll keep things volatile for sure. We don't think the markets have really priced in different outcomes for the election. We think the economy actually, it's stabilizing, but a lot of growth from here is uncertain. And earnings of low to mid-single digit growth rates just really aren't going to be enough to boost us beyond that lower for longer, moderate kind of environment that we've seen for the last number of years.
So does that mean like if you want to buy cyclicals for like 2 quarters and then that's it? Like what do you do with that?
Yeah, kind of a reversion to the mean trades. So they're still trading about a standard deviation and a half below their normal values. So there is upside for value from here, and you do want to make sure that you participate in that. And there will be probably sell-offs in other areas to fund the value trades. But then after you start to see everything normalize, then I think you want to look for these quality growth defensive stocks that are not as dependent on the economy.
One area that's been particularly defensive through this period is aerospace. We've seen.
To be fair, Brooke is an industrial aerospace. Okay, so we're going to talk a lot about planes.
I'm really into it. Machinery really gets me going. But I do wonder, how much longevity there is to this aerospace cycle. It's been so good for so long. You've seen a lot of money flow into these stocks, and now you're starting to see some cracks. How much more do you think we have to go in this aerospace cycle?
I think there still is some legs to it. It's always been kind of an attractive area. It's got some cyclicality, some defensiveness to it. We're generally positive on it. Other areas that we like, though, that are pretty beaten down in the value space is you can start to look at more like retail-oriented companies going into the holiday season. So companies like Walmart and Lowe's we think are actually pretty interesting from here.
What about, talking about deep value, what about energy? Because one of the calls from JP Morgan is they like the deep value. They like the energy names. What do you think there?
So as a sector, we don't love energy right now. A couple of things. First is demand has been pretty weak because of the tariff issues. And supply, while it's been declining still with OPEC uncertainties, we're not really confident that supply and demand is going to get to the right balance. We're bigger fans of energy more like second half of 2020.
Because of a growth pickup?
Mostly because of weaker demand. So we just don't think demand will be there for energy for the next year. And supply, while it's been declining, uncertain as to whether that trend will continue or OPEC will make decisions that aren't quite positive for supply. So just not a good enough, tight enough balance for probably another 12 months.